Hello friends, hope you are well. Let's deposit money on IQ option first, and if I make a profit at the end of the video, I will show you how to withdraw it. We make a deposit. As you can see, I have $200 in my account and I add $400 from Skrill. So it needs some time to load. So as you can see, I have $700 and let's pay now. That's all. Today we have a very cool method that does not need to help of any indicator. It consists of two main indicators. As for the question of which time is better to trade, I will ask such and other questions during the trading process. The main thing is to do correctly what is shown in the video, and the result will be very cool. I start with $600 and today I will try to see a lot of good moments and describe each trade. So we put, first of all, 1 minute candles, because in my experience it has a much more effective result. Then look for a moving average in popular indicators and set period to 102. Type EMA, color red, thicken line, and apply. The second indicator is the very effective awesome oscillator. Here it is. Slow period 2, fast period 200, and let's start now. So come back to me for a good moment. I want to bet 300 because it's a wonderful moment. If the price goes down, I will bet the remaining 300 because the situation is clearly upward. As the indicator tell us, the EMA has crossed the green candle. When the situation is ascending, the main thing is that awesome oscillators thin candles are all on top. Look closely at the platform, and I think the red candle went out, and I bet another 300 because it's very hard for the red candle to go down. Now even the outline would appear on the screen to understand it more clearly, but this is not the only moment of this method. Other moments are more effective, and I will show you such moments slowly. As you can see, the method works in this particular situation, and great job. So I will bet $300 here because it's almost the same moment as the previous moment. One difference is that it is a downward trend, but there are strong sales as indicated by the big red candle. Maybe I can capture another good moment and then explain the essence of the strategy. A good moment was not delayed, and I will bet double 300 here because I like the layout of such indicators and candles. This time we lost the previous one. No matter what, we will win double here. So look at EMA crossing the green candle, and then the mountain made, the candles made a strong buy, then the situation stabilized and there was a strong sell, which led to a strong drop. Therefore, this process will not stop. The indicators of EMA and awesome oscillator also give a downward signal, and so it happens. This is a minimal candle analysis and strategy combined, so the method is really good, and this is the fact. Great, we won $1,956. So I found another good moment, and it is a better moment than the previous 3 moments because it's better when the EMA white line crosses the candle and there are awesome oscillator candles in the descending position as well. So place on the second candle rather than the third and fourth one. Great! Now I have reached the strongest moment when the white line of the EMA is at the crossing point and at the same time the downward trend is shown by the thin candles of awesome oscillator. Watch how awesome oscillator's last 3 candles grow and it will continue to grow. Notice the green candle that crossed the EMA white line. In this case, don't bet at all because it conflicts with the awesome oscillator candles. In this case, you would win on a green candle, but it often loses. Believe me, it has been tested by me. Great. I want to put 500 or more here. Again, my favorite mountain was made of green and red candles. Strong buying again was followed by strong selling. When awesome oscillator thin candles are in a downward position or below the middle line, in this case we don't bet if the white line of the EMA even crosses the green candle. We just remember this. If the opposite is in an upward trend, then we are not putting it down. In this case, we put it above. This is the golden rule of this method. You just remember it because it's of great importance. Great job! So watch out. Even though the big red candle came out after the green candle, as the awesome oscillator's thin candles show an upward trend and the EMA white line has already crossed the green candle, I still bet above. If you look at the front green candles, unfortunately the method did not work, but it did not lose as well. As for the time interval, what time is better to trade in this strategy, there is no such time. This strategy is not based on specific times. The key is to understand the meaning of the method I am talking about. So take different moments from the video, please, and you need them in your mind, and then you will have a pretty successful result. What a good moment here. I will put it on the very first candle. Notice the green candle also crossed, but to no avail. At least the candle goes down as the awesome oscillator shows a downward situation. For some reason the candle is no hurry to go down. As a rule, wait for the next candle and then put it. Remember that too. I will return to this moment again. So come back to this good moment again, and this time I have to invest a lot of money because I'm sure the trend will go down. I have every excuse for this. In the first place, both indicators indicate this. We would have won there if we had bet on the front candle, but I waited to see if the trend would continue, and so it happened. As you can see again, the method and good analysis justify just. Great. So it would have been better if I had attended this moment as well. I would have won now. If you also see this diagram, why you should not place on a green candle intersection if awesome oscillator is in a descending situation. and you can see the winnings of the previous red candles as well, it means that we are doing everything right. If you don't follow a specific strategy and trade on binary, you will lose money. Now, even if I lose, it's alright because I have won too much, and this loss will not change anything for me. Here I will show guys the good moments. If you like the video, be sure to like it and share with friends if you think this video will help them. Also I have a Telegram channel where I post in advance a few days before when the video will be posted. The link is in the description. So there were many requests, and now I'll show you how to withdraw the money. So we go to the site and click on withdraw. I withdraw money on Webman. In the first column I write my account code, and in the second one the amount, then click withdraw funds. And it said it takes 3 working days, but it's transferred very sooner.
Have a look at this chart over here. Now let me ask you, what is wrong with this chart? Take 3 seconds to think about this. The answer is this, is that there are too many support and resistance levels on the chart. And when you get too many support and resistance levels on the chart, you get analysis paralysis. This means that you are going to get conflicting information, right, that makes you feel at a loss at what to do. So for example, let's say, the market over here, it makes a pullback, a slight bounce, you want to buy, right? Because after all, oh, look at this area of support, Rainer. Okay, fine. And then the market goes up higher into this green level. So area of resistance, resistance, resistance. Now, do you sell at this price point? Are you going to nod your head and say sell? Okay, if you sell, right, then think about this. Didn't you just buy a few moments ago and now you're selling? And if you were to sell, then how are you going to ride the trend up higher? How are you going to ride the wave? Well, you can't, right? And that's the problem with having too many areas or support and resistance on the chart, is that you're going to get analysis paralysis, right? Every decision that you make, right, somehow there's another piece of evidence telling you that you are wrong, and you always feel lost and confused. So if you feel anywhere along those lines, don't worry, because in today's training you will learn, number 1, why support and resistance, they are not equal, because there are times support is more powerful than resistance, and there are times resistance is more powerful than support. So you need to identify the right times to know which to pay attention to. So this way you get less analysis paralysis, less confusion, less frustration. Number 2, how to draw accurate support and resistance levels so you can better time your entries. When exactly should you buy when the price comes into support? Because I'm sure there are times when the price comes into support, you thought, man, it's a buy. And when you buy, the price collapses. Why is that, and how can you avoid it? That's what we'll cover in this section. And finally, I'll share with you a support and resistance trading strategy to profit in bull and bear markets. And it works, right, whether you're trading the stock markets, the forex markets, or even the crypto markets. Sounds good? Then smash the thumbs up button and let's get started. Now, the first thing to understand is this. Support and resistance, they are not equal. I don't care what other traders say, support is support, resistance is resistance. No, they are not equal, because in certain market condition, right, one is more powerful than the other. Let me explain. So if you look at this chart over here, this is the chart of dollar against the Japanese yen. This market is in an uptrend. So let's say, for example, if you were to draw resistance, right, this is not how I would usually draw, but just follow along with me for now. Let's say this is resistance, 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 okay? And then this is support, support, support. All right, let me ask you, in this market condition, is support stronger or resistance stronger? Let's analyze it, right, step by step. So this is over here is resistance. You see the price breaks above resistance. This over here is resistance, price breaks above resistance. This is resistance, price breaks above resistance. Now what about support, right? This is support, price didn't break below it. Support, price didn't break below it. Support, price didn't break below it. So as you can see, in an uptrend, resistance tends to get broken. And it's kind of like logical, right? Because as you know, market is in an uptrend, it means a series of higher highs and higher lows. This means resistance should get broken. So this means, right, in an uptrend, support is more powerful than resistance because it tends not to get broken. Yeah? So understand support and resistance, right, they are not equal, right? Let me give you another example. This one over here, this stock is Adobe. This market is in a downtrend. Let's say you draw resistance, resistance, resistance. Let's say this one here is resistance. And this is support, support, support. Let me ask you, is support stronger or resistance stronger in this market structure? And the answer is this. Resistance is more powerful in a downtrend, right? If you look at support, right? Support is broken, right? Price then breaks down lower, breaks support. And if you ask me if the trend continues down lower, this area of support is likely to get broken as well. So when the market is in a downtrend, resistance is more powerful, it's stronger. So understand this concept. So now the question is, how do you actually draw support and resistance correctly? Now, you might be thinking, but Rainer, what about range markets, man? Is support stronger or resistance stronger in a range market? Great question, and I'll answer it in the later part of this training. But for now, let's talk about how do you actually draw support and resistance like a pro, right? So have a look at this chart over here. You can see that this market is in an uptrend. And as you know, right, in an uptrend, support is stronger. So this is where we want to give it more attention. So let's learn how to draw support in an uptrend. So why don't we want to draw resistance in an uptrend? Because as you've seen, right, resistance tends to get broken in an uptrend. So we're not too concerned about it. Let's focus more on drawing support. Okay, and the way I'll do it is that I'll pay attention to the two most recent swing points. What do I mean by this is that this is what I call a swing point. This is what I call a swing point. This is a swing point. This is a swing point. So I'll pay attention to the two most recent swing point when the market is in an uptrend. I'll explain why shortly. And how do I draw support is like this, right? So you can use a rectangle tool or a line if you prefer, right? But for those of you who are new, I recommend drawing it as a box because support is an area on your chart. And what I would like to do is to get as many touches as possible, right, at my area of support. So for example, I'll draw this one possibly something like this. Okay, why do I draw this box in this manner? Because I got this one touch over here, I got the other touch over here, and this touch over here. So I got 3 touches over here. So I like to get as many touches, right, into this area of support. So another example, this one over here, I would draw this probably something like this, okay? So for this area of support, you can see, again, I draw it in this manner because I got multiple touch. I got this one over here, previous resistance, which became support, this area of support, and then this area of support as well. So this is what I mean by, drawing your support to get as many touches as possible into the box, into the zone. Now, what about this level here? And what about this level here? Why are we not drawing support at that level? Good question. And the reason why I don't draw support at those levels is because if you think about this, let's say if the market comes down lower into this low over here, let's say into this area of support. At this point, I am not interested to buy. Why? And the reason is simple. If you think about this, if you visualize the chart, if the market were to reach this point, this market is no longer in an uptrend. It's probably in a downtrend. And I'm not interested to be a buyer in a downtrend. I like to trade with the trend. Of course, for those of you who are counter trend traders, that argument might not be valid. But for me, I like to trade with the trend. And if the market reaches this low, this market is in a downtrend and I don't want to be buying, even though the price is at support. I'd rather much be selling. So this is why I don't draw, every swing level as support on my charts, because there's no point to it. Make sense? So let's have a look at one more example over here. So this market now is the inverse. It's now in the downtrend. So how do we draw our resistance, since you know that resistance is more powerful in the downtrend? So same concept applies. We like to get as many touches as possible. So this is going to be one of it here. Okay, so you can see over here. This one over here, we got quite a number of touches, right? 1, 2, 3, 4, 5, 6 touches, right? So my zone, my area of resistance will be here. The other one would probably be somewhere here. Okay. So you can see that over here for this second one, I got 1 touch, 2, and 3 over here. Now, what about this one and this one over here? Why am I not drawing this? Again, if the market were to rally up higher and retest, let's say, this highs over here, at this point, right, let me ask you, is the market in an uptrend or a downtrend? At this point, if the market gets to this price level at 34,000, the market is probably in an uptrend. I'm not interested in shorting uptrend. So this is why I don't draw every level as my resistance, because it's not relevant. Make sense? So now, next question is this. How do you trade support and resistance like a pro? So now you know how to draw support and resistance, right? How do you actually trade it like a pro? So here's an example. If you look at this chart, you can see that this is an area of support, right? And traders might be tempted to let the price comes into support and then just buy over here. But for me, I don't really like to do that, because I'm sure you've experienced before. When the price comes into support, you buy, and the next thing you know, it collapses through support and goes down lower. So what I like to do instead is to actually wait for some sort of a confirmation, otherwise known as an entry trigger. And by the way, if you are enjoying this training so far, smash the thumbs up button. If not, hit subscribe. Okay, moving on. What is an entry trigger? An entry trigger is simply a specific price pattern to help you time your entry, to tell you, for example, hey Rainer, it's time to buy. Yeah, so we are looking for that specific price pattern to tell us that, hey Rainer, it's time to buy. So what price patterns can we use, right? So there are a few common ones, but two I want to share with you today. One is called the hammer. So what is a hammer? So for those of you who do not know, a hammer simply tells you that the buyers, they are temporarily in control, because this is the opening price of the hammer. So let's say if you look at this hammer, it's on a daily time frame. Okay, this is what it's going to mean. This is where the market opened. This is where the market has closed. And this is the high of the day. And this over here is the low of the day. So the story goes something like this. So when the market opened, right, the sellers took control and pushed the price down lower near the lows of the day at the maximum pessimism, right? What happened is that the buyers, right, they were pushed to a corner, and then they found the strength, they found the courage, they found the conviction and to retaliate and push the price higher to close near the highs of the day. So this is like, for those of you who watch Marvel Endgame, right, you know Captain America is all alone facing Thanos' army, and you know that, well, that's the point of maximum pessimism. You thought, oh man, that is the end. Then what happens? Right, then that's where, you know, I think his friend, right, Sam, right, the Birdman comes in. Then the portal starts to open. Black Panther appears. Wakanda forever! Right, and then of course, you know, they got into a war. The good guy won the bad guys, right? So this is kind of like similar story at a point of maximum pessimism, right? You know, the buyers to control and push the price higher to close near the highs of the day. So as you can see, this particular price pattern tells you that the buyers, they have temporarily won the war. They are in control for now. The other price pattern I want to share with you, or candlestick pattern if you want to call it, is called the shooting star pattern. So you can see this over here, again, is the opening price. This is the closing price. So one thing to note is that a hammer and a shooting star, right, the opening price and the closing price, they are opposite, right? So this is for hammer, the opening